The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Welcome to this Friday edition of the Financial Exchange. Paul Lane, Marc Fandetti, and Tucker Silva here with you in what's been a relatively quiet week in terms of economic information. We did have the Federal Reserve meeting minutes come out this Wednesday. Big takeaways from that is inflation continues to remain a concern of the Federal Reserve, and also they are concerned about the AI data center investment and its impact on persistent inflation. So that is something that is certainly a focus. We did have Q2 earnings that have come out this week. We've had a first few handful of couple companies who have reported their numbers, but really earnings season will kick into high gear next week when the banks will kick off the earnings cycle on Tuesday, July 14th, with some of the big financial institutions coming out with their Q2 earnings numbers here. Taking a look at markets this morning, we're relatively in mixed territory. There's not a tremendous amount of activity going on. Oil continues to remain relatively flat after a pretty significant uptick earlier this week as the U.S. and Iran situation has muddied a bit, where there has been trading military action on both sides here, but President Trump hoping that they get back to the negotiating table soon. But we kick off our program this morning by talking a little bit about a company that's probably not too well known to many investors here domestically in the United States. This is SK Hynix. It is a South Korean company that is analogous to Micron and SanDisk. They are a chip maker that provides memory chips for AI data centers that has been an area of really significant investor enthusiasm over the course of the last 6 months or so here, and even dating back to 2025 as well. SK Hynix is going to debut on Wall Street. They are going to be raising about $26.5 billion in this IPO. That is far less than SpaceX IPO that we just had about a month or so ago, but does rank very high in terms of dollar value from other IPOs that we've seen over the course of the last 10 plus years or so. And Marc, this continues to be an area of significant investment demand, and they're trying to leverage what is basically a unsatiated appetite for anything that is chip related here.
Yeah, when a company wants to raise capital, there are two stories here. I think one is they need to raise money to build factories to make more chips, and we're in a boom cycle. That's to be expected. That also sows the seeds of the destruction of the end of the boom cycle. So while it's in the moment, it catalyzes more enthusiasm. It also means that the bust, when it happens, and it will, and this is, I hate to sound doomish, but all booms are followed by busts. You could argue we don't know it's a boom until the bust occurs. Then in retrospect, it was obvious. But I think it's pretty plain to most observers, even enthusiasts, that we're living through a boom. This is more evidence of that, and they're looking to take advantage of it. So there's that part of the story, which has both a good and a bad interpretation, sheen, I don't know, whatever you want to call it. And then there's the more encouraging story. You hear a lot of doomsayers talk about the demise of the dollar as the world's reserve currency, and you're going to immediately think, where's he going with this? Where am I going with this? But this is testimony to the fact that when companies want to raise capital, they don't do it on the DAX They don't do it on the FTSE. Or whatever the name of the London Stock Exchange is. You know what I mean.
I know it's FTSE is the letters for it, but the FTSE is always funny to hear out loud. I get where you're coming in with though.
Right. When you want to raise money, you do it here. And you could argue, well, cynically, they're looking to take advantage of the astronomical prices, so-called valuations. Price is a multiple of whatever earnings is your favorite definition of earnings. They want to take advantage of a bubble, and that is true. But to me, it's also testimony to the fact that the U.S. has the deepest and most dynamic financial markets in the world, and as long as that is the case, and as long as we really don't screw things up, and there are plenty of ways in which we could, the dollar will remain the world's reserve currency, and that has benefits in terms of lower interest rates, ease of doing transactions and stuff like that, and higher standards of living at the end of the day. So this is a testament to the strength and the dynamism of the U.S. economy and financial markets to me.
Absolutely. It will be the largest sale by a non-U.S. company with this IPO here. So what they do when you list on the U.S. stock exchange for a foreign company like SK Hynix, that is a South Korean company, they will have what are called American Depository Receipts, or ADRs. What will occur is they are going to offer 178 million ADRs. The ratio of ADRs to shares is for every 10 ADRs that you buy, you get one share of the company. They are going to be priced at $149 each. So if you wanted to buy 10 shares of the ADR to get one share of the actual company, you'd spend about $1,490 here. So we'll see what the appetite looks like for this IPO here. It certainly has been an area that has seen tremendous amount of investment and enthusiasm. And to Mark's point earlier, they are harnessing that enthusiasm to raise additional capital to build out their capacity. And the question for all of us as investors and people who follow the market is, to your point, Mark, certainly there is just, it seems like unparalleled enthusiasm for everything within the tech stack that goes into these data centers. How long does that go on for is what we'll continue to debate for months here. Any cracks, that's what we're going to be looking for.
Yeah, no doubt. The appetite, as you put it, will be voracious. The question, is that a good sign or a bad sign?
Right.
It may seem like a silly question to ask. They want to raise money. They're going to raise it, and they're going to use that to make investments. Those investments will make chips cheaper, more plentiful. These things are a commodity, as you've talked about. Chuck Zada and Mike Armstrong have talked about a lot. So again, these boom periods, whether it's the 1920s or real estate in the 1980s more narrowly, or internet infrastructure in the 1990s, they tend to contain the seeds of their own demise.
Hopefully that doesn't come sooner rather than later. But like you said, it always is going to be something that looms on investors' minds here.
By the way, I'm sorry, Paul, just before 10 o'clock this morning, Bloomberg's reporting that the ADR is at $175 each.
Wow.
Or 17% higher than its offering.
So
that's according to Bloomberg.
Clearly, there is some appetite and demand out there for those ADRs. There is a lot of enthusiasm, which is to be expected. I think that a lot of investors have been incredibly blown away by the returns of the Philadelphia Semiconductor Index. To be clear, SK Hynix isn't going to be immediately eligible for that, but that certainly, I feel as if, is part of their plan here to list on U.S. markets to get access to that capital, to get access to that investment, to narrow down some of the valuation gap between Micron, which I would say is its kind of U.S. counterpart that has just surged dramatically year to date and certainly over the course of the last 12 months. The tech sector today in early trade, it's been really volatile all week long, but it seems to be relatively flat at the moment, but we'll keep you apprised of further market action there, and we'll keep you apprised as to how SK Hynix comes out in its early trading here. It clearly seems like there is a lot of enthusiasm for this
What's
IPO.
interesting about that, you say narrow the valuation gap. You're going to hear that phrase a lot, I think, over the next couple of days with respect to this, of course. And what we mean by that, correct me if I'm wrong, is that investors in the U.S. are willing to pay a higher multiple of earnings than investors elsewhere.
Correct.
So you want to list your shares here if your peers here in the United States are getting a higher multiple because you can raise more capital. So why is that? Are we more savvy long-term investors or maybe speculators than the rest of the world? I mean, that's when you think about that, it might raise some concerns. Why are U.S. investors willing to pay a higher multiple for the same thing? We're talking about the same. Like, this is not. They're not starting a different company here doing something. They're doing the same thing as they are abroad. They can raise more money here, all else equal, because markets here are arguably frothier.
Does it also play into the enthusiasm for the dollar? Like, I mean, that's kind of always been the issue with international markets versus U.S. ones, where we've commanded a higher multiple. Is it that playing out too on this?
Well, I guess it depends on what
level?
you think about what the exchange rate's going to do, and I don't know that.
Right.
I don't know that any. Right, if you think the dollar is going to go up, and you are an investor living abroad, say you're in South Korea, is it a dollar or you're a yuan or whatever their currency is? Who cares?
Yeah.
We only care about the dollar here. If you think your currency is going to gain value relative to the dollar, or you think the dollar is going to gain value relative to your currency, you might want to own more dollar-denominated assets. So that might be an angle for some, but I suspect most are just looking to cash in on the boom.
Just the froth, yeah. I hear
Cash in on the froth, right.
All right, we're going to take a quick break here on the Financial Exchange, but when we come back, talking about an issue that should be impacting all listeners at the moment is grocery store prices. Volumes are down, and grocers are looking to make cuts across the board to entice you to fill up that grocery basket a little bit more than you were previously. We're going to cover everything on the consumer spending in the grocery stores right after this break here on the Financial Exchange.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show.
The most important part of an inheritance isn't always the money. It's the understanding, the intentions, and the family relationships left behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, estate planning isn't just about who gets what. It's about communicating your values, explaining your decisions, and helping to avoid misunderstandings after you're gone. Our new guide, Talking to Your Kids About Inheritance, explains why these conversations matter and what to consider when fair and equal may not mean the same thing. You'll learn strategies for managing expectations and helping your family understand the thinking behind your plan. Get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets from the cost of long-term care takes more than good intentions. It takes a plan. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, shows how these trusts can help protect certain assets from nursing home costs without giving up everything you've worked so hard to build. You may be surprised to learn that you can continue living in your home, receive trust income, and still maintain important flexibility in your planning. The guide also explains how these trusts may help your family avoid probate and preserve important tax benefits for future generations. If protecting your home, investments, or other assets is important to you, request your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local Heart Walk. Extraordinary starts with you. Join Heart Walk today. Find your local Heart Walk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Markets move fast. Follow the Financial Exchange live on X so you never miss a story. This is the Financial Exchange Radio Network.
Consumers are paring down their spending at grocery stores, and grocery stores are racing to cut prices. We covered this earlier a little bit this week as Walmart announced that it was going to be cutting prices on ground beef rolls, cherries, potato chips, a 24-pack of Coca-Cola, and all of these measures are aimed at getting consumers across the United States back into their stores. What grocers have seen is a decline in volume in terms of what people are spending year over year. In the 4 weeks that ended the month of June across 61 categories, if we looked year over year on the volume, we have seen a 2% decline in volume of groceries purchased by American consumers. And so as a result of that, what these grocers are trying to do, though they operate on incredibly narrow margins as it is, anywhere from 1.5% to 2% is the average grocer margin, they're looking at some potential loss leaders to just entice people to not only come in the door, but put more in their basket. And Mark, this speaks to sort of the larger inflationary story. We focus so much on the oil and gas side of things here, but inflation has percolated across many different categories, and that's why you have it running at about 4% year over year. Now, the Fed typically will look to strip out the impacts of food and energy because they do tend to be volatile, but it certainly is part of the inflationary story for sure.
Yeah, inflation, CPI, consumer price index, which is what we normally devote our attention to, and what people think of when you say inflation. There are other measures. The Fed uses a slightly different measure, but for reasons that are not important to this discussion. Inflation is the average change in prices. So there's a lot of other stuff in there. And food could be a driver 1 month. Insurance premiums could be a driver another month. Cell phone services could be on the margin, distorting the trend in inflation. There are lots of subcategories, lots of components, which is why the Fed prefers measures that strip out things they believe to be outliers. Not always food and energy. That measure that we call core is imperfect. There's no assurance that the biggest distortions of what's really going on in inflation are going to come from those two segments, Paul. That's why Chairman Warsh has cited trimmed measures, including the median, which is the one in the middle. So you trim everything except for the observation, whatever that category is in the middle, and that changes every month, to get at what the trend is in inflation. It's a really hard thing to do, Paul. We don't know what inflation is, what it truly is in real time.
It is definitely difficult to try and assess, but certainly from what you're seeing in terms of transaction volume, it does seem like there's no way that you can cut it otherwise, that Americans are looking to slightly deviate in terms of what is going to their grocery basket on a weekly or however frequently they shop basis. Now, some of the reasons that are attributed to this decline in volume, the rise in weight loss drugs is something that has been cited, the reduction in food stamps is another one that has been mentioned. But however you look at it, shoppers are buying less. It is anticipated that over the course of this year that we would see the prices across all food categories rise about 3.2%. That's according to the Department of Agricultural Economic Research. So it will be something that will be on the front of consumers' minds. So we'll continue to follow it. But another story that
can I point out? Can I say another thing about that? This is a gimmick. I mean,
yes.
they're
Absolutely.
lowering prices on some conspicuous things. That little basket you quoted was a sort of eclectic, random selection of things. Overall, food prices are going to continue to rise. Transportation costs are going up. You and Chuck and others on this show have talked about diesel prices. They've spiked, and they're going to continue to go up because Russia's now cutting off exports. Obviously, that makes transportation more expensive, which feeds into food and grocery prices. So it's going to take more than a couple of gimmicks by industries that are bullied by, say, the president. And understandable, if I were in his shoes, I guess I'd be doing the same thing, if to the extent that I had influence, and he does. So they're going to make some big conspicuous cuts, but it's not going to make a dent in overall inflation, because the forces driving inflation don't originate with grocery store pricing practices. So browbeating grocery stores or gas stations misdiagnoses the problem. There are a lot of things the government can control. It can control the money supply via the usual methods that the Fed employs. It can control short-term interest rates, I should have said, via its control over the money supply. And that's something that is within the federal government's control. But if you tighten monetary policy to reduce inflation, you generally also drive up unemployment.
That's the difficult balance that you find yourselves in. Yeah, to be clear, just because Walmart announces that they're giving you a deal on cherries or 24-pack of Coca-Cola, that doesn't mean that they're just foregoing their margins on other areas. And both those markets, both gas and food, they're low margin businesses. So there really isn't a lot to cut. There's a tremendous amount of competition in both of them. So they can only do so much. And to your point, Mark, it is a bit of a promotional endeavor. And listeners shouldn't take it as, all of a sudden there are deals everywhere and everything's on sale. It's just promotional activity to try and get you into the stores. And hopefully when you're in there, you buy more stuff. That is certainly something that all the grocers are focused on. Taking a look around at markets, we're in relatively light trading activity today. The S&P 500 is up slightly, and the Dow Jones is up about 78 points. Taking a look at oil, it sits around $72 a barrel, down about 0.5% or so. We're going to take a break here on the Financial Exchange, but when we come back, we're going to have Wall Street Watch and much more on interest rates right after this break.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The document may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Todd, many people are afraid that if they transfer money to an irrevocable trust, they will be giving up control of their assets and will have to ask their trustee for permission to spend their own money. Now, is this a valid concern?
No, it's really not. And folks, when you think about irrevocable trust, please remember that there are many different kinds of irrevocable trust. There are some that require a loss of control, rigidity, inflexibility. However, the trust we're talking about when you're protecting assets from a nursing home allow the donor to remove and replace the trustee, allow the donor to have really an unbelievable amount of control over the assets that are in the trust. They can live in their house, they can manage and invest their own money, they can sell a house, they can buy a new house. When the money's invested, they can have the income come directly to them. Folks, the control you keep over your assets in an irrevocable trust is really something you must try to learn about. And that's why we're giving you away a guide today to help you understand these trusts.
Request this brand new guide from the folks at Cushing & Dolan at 866-848-5699. It's called Unlocking the Power of Medicaid Irrevocable Trusts. Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets trading modestly lower to close out the week as investors cautiously await developments out of the Middle East between the U.S. and Iran. South Korean chipmaker SK Hynix is also making its debut on the NASDAQ later on this morning, most likely in the largest ever market debut by a foreign company. Right now, the Dow is down just over 0.1%. S&P 500 is down merely 5 points. NASDAQ down about 0.25%. Russell 2000 is down 0.2%. Russell 2000, 10-year Treasury yield is up 2 basis points at 4.56%. And oil down about 0.5%, trading right around $71 a barrel. Delta beat second quarter earnings expectations, citing strong demand across the board. CEO Ed Bastian said in an interview with CNBC that he expects pricing power from the surge in jet fuel prices for the company to last, even as oil prices fall. Delta down by 2%. Meanwhile, shares in WD-40 jumping nearly 17% after beating earnings expectations and also hiking its full-year guidance. Elsewhere, the Wall Street Journal reported that Netflix is discussing the addition of live channels and bundling other subscription-based streaming services to bolster subscriber engagement. Netflix shares are off by 3%, and shares in telecommunications firm Vodafone jumping 13% after it was revealed French billionaire Xavier Niel took a 16% stake in the company worth about $6 billion. I'm Tucker Silva, and that is Wall Street Watch.
Axios has a piece here regarding the yields on inflation-protected long-term treasury bonds. They are a lot higher than they've been in decades, and they are quoted as saying, Axios, this is one of the times when what is happening in the bond market matters to the stock market. Mark, I was wondering if you could elaborate on just what tips are treasury inflation-protected securities and why it is so important as to its impact at the moment.
No, I'm kidding.
Then I'm in trouble because
tips are
you're
one way.
far more
No, this is a good topic.
On
This is
than I am.
this is a good. No, this is a good. You could handle it just fine, but you need to give me something to do. So real yields are. I'll just define them. You take the stated interest rate, the one in the newspaper, the 10-year Treasury yield, about 4.5%. You subtract expected inflation from that, because inflation. Well, you subtract expected inflation, you get the real yield. That's the textbook definition. But as you may have sensed from that definition, these things are not, there's no such thing as a real yield. So we have to infer it from financial instruments that are adjusted for inflation. They get you close to what the real yield, the after inflation interest rate, which is what we care about as investors, they get you close to what that should be. The real yield on, say, the 10-year Treasury is up about 0.4 percentage points, 40 basis points, if you prefer the finance jargon, this year. So real yields are rising. Real yields, again, after inflation interest rates, had been coming down for decades, right? Along with nominal yields. Interest rates have been declining, had been through COVID, declining since the early 1980s. So something's changed. If you look at a chart of, say, the yield on the 10-year Treasury, real or nominal. Nominal is finance jargon for interest rates with inflation, and it's the rate you see quoted in the newspaper. That's been trending up since COVID. So what's changed? Well, if you think about longer-term rates as being composed of two things, future short-term rates, like what the Fed's going to do in the future, and then some kind of reward, a risk premium for buying a bond and holding it for, say, 10 years when you don't know what the future is going to hold. That allows you to think in turn about, well, if those are the components of real rates, future expected short-term real rates, and future and some compensation for uncertainty, a risk premium, that gives you a framework for thinking about what might be driving real rates upward over the past several years, and we've seen that trend continue this year.
I've been so startled since the beginning of your explanation that you just were going to cut off and not give the explanation in the first place. It made me reminiscent to when I kicked you and I had a scratch in my throat and you gave me a two-word answer on another show and I was dying, having a coughing attack.
Then prompt me to rant about the Fed or something. Which is not hard. It's not hard.
Yeah, I don't think it was a Fed story.
There's a little bit more on this. And naturally, we've got a framework now. Well, real rates could be going up because expected future, that's a little redundant, but expected short-term rates are going up, or the premium for holding, say, a government instrument over a long period of time is going up because the government's fiscal situation gets worse by the minute. It could be one or both of those things that are driving up real rates this year. It could also be, there's actually a third factor, and it's investment demand. All these data centers, all the debt being issued by the so-called hyperscalers, the firms like Meta and others that are building the infrastructure to run these AI programs, buying computers to run AI programs, in short. That soaks up capital, competes with you and me for capital. You want to take out a mortgage? You're competing with Meta if they're not directly, but indirectly, sure. So that could also be driving up future expectations of future rates, Paul.
To that point, we hit a trough on the U.S. 10-year Treasury earlier this year around 3.95%. It peaked out at 4.66%. We now sit at 4.55%. And that has a direct impact on what we're seeing here in the housing market. We just got data yesterday for the month of June in terms of what we saw for the U.S. domestic home sales. And it was a very weak month of June, which is typically the most activity that you'll see in a calendar year is occurring in the month of June, a really sort of crystallization of the spring housing market coming through. And what we saw was a 2.4% decline in terms of sales in the month of June compared to the month of May. And there are numerous different factors to kind of examine with this housing data that we got yesterday. First, like I mentioned, is, the decline in transaction volume month over month. Some of that, I think, does play into what we've seen on the mortgage rate front, where we were just below 6% on the 30-year fixed mortgage earlier this year. Last week, the average was about 6.43%. So we've almost seen about a 0.5% increase from the troughs on the 30-year fixed mortgage to where we were as of last week. And Lawrence Yun, who is the head economist of the National Association of Realtors, has mentioned that the reason that we're seeing the divergence in monthly activity is because of this sensitivity to interest rates, Mark.
Yeah, I'm looking at the 30-year fixed rate mortgage. You could see this in a number of places, Yahoo or the Federal Reserve Economic Database, so-called FRED. It much like because it moves in sync with the 10-year Treasury, because most mortgages are paid off a lot sooner than 30 years, as you know, and as anybody listening knows, because you guys talk about it a lot. 10-year Treasury, 30-year mortgage, very highly correlated. Their daily movements have a close correspondence. That also, the 30-year mortgage, the rate on the 30-year mortgage, trended down for 3 decades. And in the 2010s, never got higher than 5%, once or twice early in the decade. Since 2022, it's been above 6%, above 7% at times, and has never looked back. So there's been a shocking, if you're a mortgage a potential borrower, there's been a shocking change to that trend as well. Right. Equally shocking. If you had told you or me that, I think 6 years ago, before all this business, this COVID business, the resulting inflation, et cetera, started, and you told us that the fixed rate mortgage was going to be double the average, the 30-year, was going to be double the average this decade relative to last decade, I would have predicted that, because I would have said, well, all else equal, housing prices should collapse, right? Because they have to move inversely to interest rates at some point, but they haven't, which is surprising.
Yeah, we can I'm going to be sarcastic when I say this, the limited development on the inventory front post-Great Financial Crisis as to the reason why prices hasn't come down. And it's been a detriment for a lot of home buyers out there. Not only have you had to combat higher interest rates, twice what they were, 5 or 6 years ago, but also you've had home prices appreciate, upwards of 50% depending on the region over the course of the last 5 or 6 years, making the affordability issue at the forefront of many Americans' minds. We now have hit a record for the national median home price of $440,600 as of June's data. On the inventory front, we still are running at about 1.5 million active homes being listed. That's equivalent at this sales pace to about 4.6 months of inventory. Typically, you kind of want it to be around 6 months to have a good balance between inventory for buyers and sellers to really be able to strike a fair deal. And it dovetails into our story here about just younger Americans are questioning as to whether or not buying a home is a valuable investment. In this piece, they outline the opportunity cost that one homeowner experienced by putting 30% down on a property that was valued at $950,000. He claims that if he had invested in the S&P 500, that he would have done far better. That's a little bit of cherry picking what was a very robust time for the S&P. So I don't know if I fully ascribe to that, but certainly the affordability issue has been prevalent, Mark, for the last few years here.
Yeah, I mean, have you seen them do anything other than new construction? Are they doing anything other than, aside from multifamily, tearing down a reasonably priced, modest size home? Modest meaning much bigger than the house I grew up in, but these days be less than 2,500 square feet. They're tearing them down and building monsters, 4 or so thousand square feet, just pulling those numbers out of thin air. But I bet I'm not too far off. So we've got, at least here in the Northeast, new supply is probably a lot more expensive than whatever it's replacing. That's one thing that sort of comes to mind. I have no data on that, but I suspect that's part of the driver. What was the other point you made?
Definitely is. Just really... that investors, not investors, Americans, younger ones, less conscious.
Let me answer that. Look, how home prices competing with like stock prices in terms of appreciation, that's an anomaly. Up to the 90s, home prices changed at about the rate of inflation. In other words, you got out with what you put in, adjusted for changes in the level of prices, adjusted for inflation. So homes were not historically, up until the 90s, when admittedly something changed, homes were not an investment. I'm not saying real estate was not an investment. I'm not saying homes in certain markets in Florida and Southern California at one time didn't appreciate tremendously. I'm just saying, on average, home prices did not do any better than inflation in terms of their growth rate.
We'll have to keep an eye on the real estate data as it comes out here in subsequent months, but not a great month of June here. We're going to take a quick break here on the Financial Exchange, but when we come back, we're going to be talking about the oil market. It is not ready for the Iran ceasefire to end. We'll have much more on the energy markets and the markets in general right after this break.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Missed a show? You can find them on our YouTube page. The show streams live every day, but every hour is archived, including all of our most newsworthy interviews. Go to YouTube and search for the Financial Exchange Radio Show.
Prices at the pump have come down a little bit from the peak levels that we saw at $4.50 a gallon. We now sit with a national gas average of $3.85 a gallon. However, this Pete here in the Wall Street Journal discusses how this is not something that is permanent by any means. We are going to continue to see potential volatility in the energy markets here over the course of the next few months or so. What's occurred is over the course of the war, many countries have depleted a lot of their strategic reserves to kind of keep the market, the oil market, buoyed here in terms of the supply and demand imbalance that we are experiencing with the Strait of Hormuz closed. However, it leaves places and different countries in a lean spot if we were to go through any type of further disruption. That was evidenced earlier this week when fighting between the U.S. and Iran resumed. We saw oil spike up about 5 or 6%, and it continues to be an area that is quite fragile, Mark, here heading into the next couple months, that there doesn't leave a lot of inventory left within reserves because of what's gone on in the prior months here during the war.
Yeah, so we'll probably see inflation come and go in, I was going to say fits and starts, but it's more like episodic bursts followed by periods of disinflation, the rate of inflation falling, that is, for the foreseeable future. I mean, there's no end to this, whatever we're calling it now. You get into trouble if you call it a war with some people. The president himself calls it a war from time to time. Well, conflict, dust-up, stalemate. I don't know what to call it without offending some people. So we'll just call it conflict in the Middle East. Iran has no incentive to bring this to a head to resolve this anytime soon. For lots of different reasons, they have no incentive. We don't appear to have a clear end game in mind. We're just going to bomb them every so often. That didn't work for like 8 weeks straight, but we're going to continue to do that periodically and hope that it brings them to their senses or something. But at the same time, we don't think they have senses to be brought to. So I don't know, Paul. I guess if I had to guess, based on this sort of incoherent policy on our part and the incentives facing the Iranians, who have no accountability to their electorate, this goes on, a long time.
I could see that for sure.
Many people assume that if an asset is irrevocable, it's completely out of their hands. Well, that's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to retain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today by calling Cushing & Dolan at 866-848-5699. That number again, 866-848-5699. Or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Tucker referenced earlier, Delta came out with their earnings yesterday for the second quarter. They're still feeling the impacts of fuel expenses, which are up 77% from a year earlier. In Q2, they spent about $4.4 billion on fuel. However, they continue to see a tremendous amount of demand for their airfares, and the CEO was quoted as saying that they don't anticipate bringing down airfares even with the recent drop in energy prices. Delta continues to drive a lot of margin from their premium travelers. That premium seat market is up 17% from where it was last year. That has been a big focus of the airline. Broadly speaking, airfares from the end of the month of May are up 27% from where they were last year. And by all accounts, it doesn't seem like travel demand is slowing across all of the major airline carriers, and they continue to combat higher prices on the fuel side of things. So we'll keep you apprised as more earnings come out from some of those major airliners over the course of the next few weeks. That's all the time that we have for the first hour of our program here. Markets are open in relatively mixed territory, pretty flat on the day. We'll have much more on the markets and the economy right after this break here on the Financial Exchange.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our number one killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our new guide this month is titled Talking to Your Kids About Inheritance. Mike, what are some of the considerations for what needs to be brought up in conversations with your kids about their potential inheritance?
Well, first things first, I don't think it's always necessary that you do have the conversations, but just beware that if you don't, it can lead to confusion after the fact, especially if it's a non-equal distribution of assets. It can oftentimes lead to infighting. We've all seen that one before. And it can oftentimes lead to people making financial decisions because they're unaware of an inheritance that could be coming, that might have been different had they been aware that someday, hey, this might be coming my way.
They're never easy conversations to have, but they're typically easier before there's a crisis as opposed to having to have them during or after the crisis.
Well, I mean, to put it plainly, at a certain age, you might not be able to explain the decisions, and that can lead to even tougher conversations. But what I would urge people is to, think about how to have those conversations, because like I said, on more than the number of occasions that I would like to see, I have seen inheritances tear families apart. Unfortunately, that's what money can do to people. And if you have those conversations up front and early on, it can at least go a long way to potentially prevent that.
The guide is titled Talking to Your Kids About Inheritance, and you can request it by calling 800-393-4001. You can also request it online at armstrongadvisory.com, and that phone number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Paul Lane and Marc Fandetti.
The S&P 500 is closing in on a winning week, though trading today has been relatively quiet. Not a lot of volatility on the markets, perhaps waiting to see what happens between the U.S. and Iran over the weekend. We do have some big news out of South Korea today. SK Hynix is going to be debuting on the U.S. markets. They are seeking to raise about $26 billion in an IPO. We are awaiting their first trade, but initial inclinations are that there is a tremendous amount of appetite for this IPO. SK Hynix is a company that is a memory chip maker. They are similar to their U.S. counterparts, Micron and SanDisk and others, that have generated a tremendous return year to date and over the last 12 months, as there has just been incredible demand for these memory chips that usually were utilized in electronic devices such as your laptop or your iPhone, but now they are being used abundantly across AI data centers. So investors are looking for any way that they can get a bite out of what has been a very profitable trade. Some may argue that that trade is a bit overextended, but regardless, clearly with this IPO looming, there is the demand there for investors to continue to buy these companies that are so integral to the tech stack and the AI data center build out. Want to talk about the lead of our program here this hour about the benefits of diversification. It's a piece here from Barron's where, Marc, I know this will be right up your alley. I think the way I came up from an investing perspective was always to have a portfolio that had exposure to all these different areas of the market: emerging markets, international equities, small caps, mid caps, large cap value, large cap growth. That was sort of the way that I was trained in the industry as to how to build out a portfolio. The problem with that portfolio construction is over the course of the last 5-10 years or so, because of the significant returns from the Magnificent Seven, the S&P 500 has been a far better performing portfolio. That sort of passive approach of just tracking the S&P 500 indice is much better from a performance perspective than the diversified approach I spoke about before. But things are starting to change here, at least in what we've seen year to date on some of these other areas of the market.
Yeah, public markets, markets in publicly traded stocks, things that you see on the New York or the American or whatever, the NASDAQ exchanges, consist of much more than the 500 leading companies identified by S&P and that comprise the S&P 500 index, or even the Russell 1000 index of the largest by market capitalization, total value of their shares, companies listed in the United States. U.S. companies are about 65% of total stock market, global stock market capitalization. I get that number by looking at the MSCI, that's Morgan Stanley Capital's ACWI, which is an acronym for All Country World Index. I'm looking at its components. And you see North America, which is mostly the U.S., a little bit Canada, that's about 65%. But Greater Europe, which is the U.K. and Germany, France, etc., is about another 15%. And then what they call Greater Asia, about another 20%. Those numbers I gave you, they add up to 100, as they should. So my point is the opportunity set for a long-term investor who is seeking higher returns than you'd get from bonds, which are generally viewed as conservative. You've got a lot more choices than just U.S. markets. And if you're investing through your 401k, say a target date or so-called balanced fund, or they may even call it an asset allocation fund or something like that, you probably have exposure not just to U.S. but to foreign markets as well. And within U.S., not just big companies, not just the big tech, for example, companies that are so prominently featured in news stories every day, but smaller companies too. You might have heard of the Russell 2000. And just like I mentioned the Russell 1000, the biggest 1,000 companies by the value of their shares, total value of their stock, Russell 2000 is the next 2,000 companies in terms of the value of their shares. They're not household names. They're small cap, small capitalization. That's when people say small cap, they're abbreviating capitalization. That's a distinct investment type, and it's a distinct ingredient that should be part, arguably, of any long-term investor's portfolio. And the upshot of this story is small cap stocks, again, smaller in size, are outperforming large cap stocks small cap stocks have appreciated twice as quickly this year as large cap stocks. That's obviously not always the case. Foreign stocks have appreciated more, about 30% more, not percentage points, but percent more than U.S. stocks this year. And depending on the segment, emerging markets are up twice as much as U.S. stocks. Now, again, not always the case, but it can happen for long spans of time. So diversification generally earns you a smoother ride. It's a diversified portfolio should be less volatile. There should be fewer swings and less pronounced swings than a more narrowly diversified one. And the returns historically have been higher too. Not always, not in every sub-period, but on average over long periods.
Yeah, these other areas of the market, small caps and emerging markets, had been mentioned, and international equities too, had been focused on quite a bit over the last 5-10 years. They were trading at cheaper multiples, and they just had failed to outperform the S&P 500 over that span of time. But like you said, with those returns, they are outperforming it this year. And it is interesting on the emerging market story where all those gains have been heavily concentrated in the tech sector companies that have just seen a meteoric rise. Samsung, SK Hynix, which I led the program with, and TMC, or Taiwan Semiconductor, they make up about $3 of every 10 that goes into the emerging market ETF. So there is a bit of a concentration phenomenon there, but that's no different from what we've seen with the Magnificent Seven here domestically. You also have had large cap value stocks up 18% year to date, outpacing growth stocks. And that is something that we hadn't seen. So interesting just to study, we're 6 months into the year, the market dynamics. We are seeing appreciation in these other areas that had not been as sought after and had really trailed the big boys, the Magnificent Seven and the S&P 500 broadly over the course of the last few years.
Yeah, when you think value, you don't necessarily think of tech companies. You think healthcare, financials, utilities. Right. But the story in value, and value is defined I'll just be very general here, is relatively low price of the stock as compared to book value, low price to book, as opposed to growth stocks, which are the opposite, as defined by, say, for example, Russell, that the management firm and index provider that manages and publishes these two indices that I'm talking about. The story in value this year has been beaten down tech companies. Most of the top performers of the top 25 companies, of the top 25 best performers in the Russell 1000, sometimes abbreviated Russell 1, in the Russell 1 value this year, like 20 of them are tech companies. And Micron is the number one in terms of weight in the Russell 1000 value. You wouldn't have thought that necessarily, but tech companies, like semi companies, because it's such a boom-bust sector, as you've talked about, they get beaten down so much that they become value stocks. And they're what's driving the Russell 1000 value this year relative to growth.
It is surprising when you look under the hood of that Russell 1000. There are names that you would expect, the Walmarts and some of the financial institutions. But like you mentioned, some of those tech companies, I don't know if I necessarily would peg as value, but that is an interesting phenomenon that is going on. Speaking of value indices out there, the Dow Jones, there's a piece here from Barron's. We often give the Dow Jones a bit of a hard time on our program just because it is price weighted. There's only 30 companies in it. It doesn't really do a great job of giving you a sense for how the broader U.S. market is performing. It's sort of an older index that, though it's talked about, I think it's probably, Mark, the most popular and most quoted amongst just regular people that you might be speaking with on a daily basis. But really, the S&P 500 is of greater focus for us as investors and people who follow the markets. But there is an interesting piece here in Barron's which just breaks down. We just came up on America's 250th birthday, looking back at where we were on the Dow Jones in 1976, 50 years prior, on the 200th birthday, and just the list of companies within the Dow Jones today versus where it was 50 years ago. And only two names have still survived that 50-year period. Chevron and Procter & Gamble were in the Dow Jones in 1976 and still remain there today. There have been many new entrants and many companies that it's interesting just to look back at that have fallen by the wayside. And again, there's nothing really to take away from this piece other than it is just interesting to see, Mark, how these companies ebb and flow their names over time and become less of a point of emphasis. I mean, some of these names here, Sears, Eastman Kodak, and others that have just gone by the wayside, and points to how difficult it is to sustain dominance for a long time as these publicly traded companies.
Yeah, it's I guess it illustrates the dynamism of the U.S. economy. It's that creative destruction, as an economist once called it, is a good thing. Mm-hmm. And there's also a lesson there about the way to invest for the long term, which is to, unless you have very strong conviction in some individual companies, buy a broadly diversified stock index that takes care of those turnover issues for you. You always own shares in the industries of the future if you own an index fund. Their weights will change over time. But you don't have to worry about picking winners, which is the beauty of that structure. It's a natural way to buy a slice of the U.S. stock market, of the U.S. economy, really to the extent that publicly traded stocks are representative.
It certainly is reinforced looking at this list from 50 years ago. We're going to take a quick break here on the Financial Exchange. When we come back, we'll have trivia as well as some shakeup at OpenAI, their number 2 executive stepping down, what that means for the company, and much more on the markets right after this break here on the Financial Exchange.
The Financial Exchange streams every day live on YouTube. Subscribe to our page and follow the markets all morning long, only here on the Financial Exchange Radio Network. Protecting your assets from the cost of long-term care takes more than good intentions. It takes a plan. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, shows how these trusts can help protect certain assets from nursing home costs without giving up everything you've worked so hard to build. You may be surprised to learn that you can continue living in your home, receive trust income, and still maintain important flexibility in your planning. The guide also explains how these trusts may help your family avoid probate and preserve important tax benefits for future generations. If protecting your home, investments, or other assets is important to you, request your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Register today for this year's DAV 5K on Saturday, November 7th at Fort Independence on Castle Island. If you're not able to participate, you can still support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston. Time for trivia here on the Financial Exchange, and today is Nikola Tesla's birthday. Tesla moved to the U.S. in 1884 and briefly worked for a famed American inventor before a major falling out and subsequent feud over electrical systems. So, our trivia question today, which famous American inventor did Nikola Tesla work for when arriving in the United States? Once again, trivia question, which famous American inventor did Nikola Tesla work for when arriving in the United States? Be the third person today to text us at 617-362-1385 with the correct answer, along with keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the third correct response to text us to the number 617-362-1385 with the correct answer, along with keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Fiji Simo will be stepping down, the number 2 executive at OpenAI, due to some medical issues that she is battling. She is battling a neuroimmune condition that she had previously stepped away from her role in the month of April, and now is saying that she will step down entirely from OpenAI as they head for their public market debut. That was rumored to be later this year, though that has been debated a bit as they are going through quite a bit of shakeup with their business in terms of the valuation that it is received in the private market. OpenAI had really a tremendous head start on many of its competitors by getting ChatGPT out there first and getting over 1 billion users as of a couple months ago. However, Anthropic, its counterpart in the large language model space, has now reached a higher valuation because they have been able to penetrate the enterprise market for businesses a lot stronger than OpenAI had. Fiji Simo was in charge of the CFO at the company, as well as overlooking the chief revenue officer. She was the one that had axed the Soro video app generation of AI on OpenAI to try and cut down some costs, and had also introduced ads to ChatGPT, which did not go over that well. So OpenAI is still kind of struggling to sort of find its footing on the profitability side. It stands to sort of gather. Again, it's a private company, so not entirely sure, but that certainly has been the tea leaves here.
Tucker, did we see the story, or Paul, about OpenAI and Google selling AI models to blacklisted China groups? Financial Times reports this.
Yeah. Go ahead with that, Mark.
Yeah, I don't. I'm scanning it now, and I won't pretend to have any deep insight. I'll just read the first couple of sentences. How's that?
Yeah.
OpenAI and Google are selling their advanced AI models. This isn't funny. I don't know why I'm giggling. Advanced AI models to Chinese tech giants blacklisted by the Pentagon. Okay, so companies that do military stuff. They make military hardware or something, exposing I won't continue to read the punctuation, exposing a gap in Washington's efforts to slow Beijing's AI development.
Period.
Period. They've been supplying, they've been supplying AI services to Alibaba, Baidu, Tencent. Am I pronouncing that right?
Yes.
Tencent. Let's see. Yeah, which the U.S. government is accused of working with China's military. Period. Okay.
That's concerning.
I think I've come to the conclusion that the executives running these companies have no soul. They would sell their mother out for a bump in share price. And I can't believe we're outsourcing AI policy, a technology which could pose, by their own account, an existential risk to the way we live. I can't believe we're trusting these people with anything at all. I know we talked about this earlier in the week, and I wish I'd mentioned it with Chuck, to Chuck Zada yesterday, because he may have a different view. He may be able to tell me, as you may be able to tell me, Paul, where I'm misunderstanding things here. But we're outsourcing regulation. Basically, we're letting the fox guard the hen house here. These technologies are these programs are so complicated, only the coders who created them can understand them. They could pose a threat to our way of life if the wrong thing is let out into the wild. We've got stories like this today. In retrospect, we may rue the day or the moment or the year or whatever period of time that we didn't regulate this more like a weapon of mass destruction.
It certainly brings up a lot of concerns when you hear stories like that. It is something that is so sophisticated that I can't profess to know exactly what these model makers are thinking. It certainly doesn't sound good when you have that technology being parsed out to your enemy or your adversary. So we'll continue to follow those stories as they develop here on the Financial Exchange. We're going to take a quick break here, but when we come back, we'll have Wall Street Watch as well as the answer to our trivia question right after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80, you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years but you had $200,000 in an IRA outside the trust. If I got $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing and Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are now edging higher, but still relatively quiet to close out the week as investors cautiously await developments out of the Middle East between the U.S. and Iran. South Korean chipmaker SK Hynix is also soon to make its NASDAQ debut here in a matter of moments. We'll keep you updated on the latest there. Right now, the Dow is up about 0.25%, S&P 500 up 0.2%, NASDAQ edging 19 points higher. Russell 2000 is down 0.2%, 10-year Treasury yield is flat at 4.54%, and oil is down 1%, trading at $71 a barrel. Delta beat second quarter expectations, citing strong demand across the board. CEO Ed Bastian said in an interview with CNBC that he expects pricing power from the surge in jet fuel prices for the company to last even as oil prices fall. Delta down by 2%. Meanwhile, shares in WD-40 jumping 12% after beating earnings expectations and hiking its full-year guidance. Elsewhere, the Wall Street Journal reported that Netflix is discussing the addition of live channels and bundling other subscription-based streaming services to bolster subscriber engagement. Netflix down by 3%, and shares in telecommunications firm Vodafone are jumping 12% after it was revealed French billionaire Xavier Niel took a 16% stake in the company, worth about $6 billion. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: which famous American inventor did Nikola Tesla work for when arriving in the U.S.? That would be Thomas Edison. And Ray in East Greenwich, Rhode Island is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Ray. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com. And it does look like, Paul, SK Hynix just debuted on the NASDAQ at $170 a share just now.
Got it. So up from that 149 that they were priced at, but I think down from a little earlier this morning.
14%. 14% higher than the open, yep.
14% higher than the open, and early indications they were at 175, so a little bit less than that, but certainly still some enthusiasm regarding their debut. We'll continue to keep listeners apprised if anything out of control happens in early trading. Mark, you had spoken about some of your concerns regarding AI and the behaviors of some of the large model makers in the prior segment. One piece here that is from Bloomberg where I don't share as many fears when it comes to the use of AI agents building out 60-40 portfolios. This is something that isn't new. Algorithmic trading or machine learning when it comes to stock trading or building portfolios has been around the industry for quite some time. The reason that this piece is done here in Bloomberg, just to give the context, is that JP Morgan has been testing whether their model that is AI powered can beat, the general market. And apparently the 60-40 portfolio that they put together outperformed by 0.7% a year with lower volatility over the course of the past 2 decades. Very important caveat here that this was done with back testing. It's not something that it's based on historical context. It's not live trading by any means. It's an area where, Mark, there's a lot of models and algorithms out there in the market, and I'm just not so sure that if everybody is building this, that this will lead to great efficiencies from a portfolio assembly standpoint. But maybe your views differ from mine.
There's really not enough information here to say, not surprisingly, that what they're developing is probably considered proprietary.
Sure.
So by 60-40, by the way, we mean 60% stocks, 40% bonds.
Yep.
A pretty representative or average mix. So how might you use AI to so those are the broad parameters. My risk tolerance, my return goals are such that 60-40 is right for me. 60% equities, 40% bonds. So what active decisions within the 60 and within the 40 are being made or could be made by software as opposed to people? Well, presumably it's not which to overweight, because that would be sort of boring. I don't think it's telling them go 70% stocks if your guidelines allow you to go that high. So the AI model could be, the software could be doing that. It could be market timing. It could also be selecting managers on JP Morgan's platform, and those managers happen to outperform. I don't know. It could also be selecting individual stocks. They don't really tell you where the model added value, is what I'm trying to say. Was it a good market timer? Was it good at security selection, stock or manager security selection? Or was it something else entirely? Did it just rebalance more effectively in retrospect? So I don't know. There are a lot of levers an active manager could pull when you're running an asset allocation fund, a 60-40 fund. It's not clear here where AI, again, added value. And I don't, off the top of my head, wouldn't know where to start. If I were setting this thing loose on managing a 60-40, like what instructions would I give it? So there's that. Again, you just don't get that information here. And then there's the go ahead.
No, the parameters are critical, but obviously JP Morgan's, they're not going to tell you that, and then they're not the only ones building it. But the context,
they could tell you what I just said. Of course, I would ask that if I were. So they're going to start to take this out to market at some point,
right?
They're going to brand it as an AI managed balanced fund. Well, great. Where is they'll have this information when they take this to market, assuming they do. Where is your AI added value? Where is it detracted? Just like you would ask any active manager. And then the point you made about testing it out of sample is critical. And you can do that if you only have you can train it on the first 10 years of your sample, then set it loose on the next 10 years, but don't train it with the next 10 years so it doesn't know what was coming. This is a standard approach for testing model accuracy and so-called time series analysis. You train it on some of your set, that's called the training set, and then you let it loose on the rest of the set, that's called the test set, naturally, pretty intuitive, and then you test its accuracy on the test set. And there are variations on that. You can mix things up and to get a good sense for how robust the results are. No indication here as to whether they did that or why they wouldn't if they could have. So, not a lot to go on. But, part of my day job here, like at any investment firm, is to due diligence managers. And if Morgan thinks this is an effective way to manage money, they'll bring it to market at some point. We'll learn more.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Paul Lane from the Armstrong Advisor Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. Again, that number, 800-393-4001. Or you can go to armstrongadvisory.com and request the guide there.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
About a month ago, we were hyper-focused on the IPO of SpaceX. Now we've been talking in today's program about SK Hynix, but the interesting thing that has gone on with SpaceX, it's been, like I said, I believe it was around June 11th or June 12th in which it went public. The first trade for SpaceX was at $150 a share. The IPO price was at $135. Now SpaceX is trading at about $148 a share. What has been surprising is there hasn't really been a tremendous amount of movement in the stock price. Yes, it did peak early on around $220 a share in the first couple of days of trading, but other than that, it really hasn't garnered as many headlines in terms of its day-to-day trading activity. The same applies here for Tesla. It has relatively just stayed pretty stagnant. They will report their earnings on July 22nd, but it seems as if the continued focus here is to whether or not there is going to be a merger of Musk's two behemoth companies. SpaceX is the sixth largest in the world at the moment on a market cap standpoint, and Tesla is not far behind it with a market cap that is either slightly exceeding $1 trillion or so off memory here. So we'll continue to follow if there's any updates on the potential merger. It certainly has been rumored around quite a bit, but really no pricing action that is very significant on either company over the course of the last few weeks, which is rare. Usually with Musk companies, you do see a lot of trading volatility. Perhaps that's to come later this month when we get the earnings report from Tesla. We're going to take a quick break here on the Financial Exchange, but when we come back, we're going to be talking to Paul LaMonica from Barron's and a bit of Stack Roulette right after this break.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
From Fed decisions to market moves, watch the Financial Exchange live on X. This is the Financial Exchange.
Ladies and gentlemen, the weekend.
As promised, we are joined by Paul LaMonica from Barron's this Friday to talk a little bit about a company by the name of National Beverage. Paul, thanks so much for joining us.
Thank you, Paul.
I am familiar, Paul, with this company in particular because of the LaCroix. Sounds like the Wolf of Wall Street debate that they had. Sparkling water, that's all over my household. My wife is a big consumer of that beverage. Tell us a little bit about National Beverage. They announced a special cash dividend, and just give us a state on how the business is doing. Is my wife buying enough cases of this stuff to keep it going?
Well, she might not be. I think that the good news for shareholders is that there is this cash dividend. The company does not pay a regular quarterly dividend, but they do every now and then. I think it's 13 times over the past 22 years, they have paid this big cash dividend. So shareholders get rewarded there. The problem, though, is that this is an intensely competitive business right now. LaCroix faces competition from other sparkling water brands from the likes of Coke and Pepsi. You also have a lot of other sparkling beverage brands, independent, as well as, probiotic sodas as well, like Poppy, that have become increasingly popular. So when National Beverage reported their special dividend, they also said that sales for the year and earnings were down slightly, and that's continuing a trend for the past couple of years. A UBS analyst that follows the company has a sell rating on the stock and says that, top line growth has been, a challenge for a while now.
It certainly is a really competitive area, like you mentioned. Is the potential play for them to try and be acquired by one of the bigger players? It does seem like they all have competition, or they all have like their own offering, and the market cap on it sits around $3 billion. Is that something that has been rumored about, or are they more suited to kind of go at it on their own?
Yeah, I have not heard any chatter about the company being for sale. It's a founder-led company that hasn't really shown a willingness, I think, to look to Coke, Pepsi, or another big consumer products firm to buy it. That being said, you never know what will happen in the future, but it is not something that strikes me as likely in the next few years. I wouldn't be suggesting people buy the stock on the hopes of it being a takeover target.
Any indications as to what they're trying to focus on in terms of the turnaround here to get those sales back up and growing up and to the right from the declines that they've seen, Paul?
Yeah, I mean, it's going to be interesting to see. You haven't really, there hasn't really been much in the way of diversification for the company beyond the LaCroix brand, which is really their flagship. You know, they're constantly introducing new flavors, and they have, like your wife, as you pointed out, a pretty loyal fan base. So it's not as if this is a company that is facing, obsolescence. I think it's just a difficult environment right now for consumer products. In some respects, the success of the LaCroix brand has probably attracted a lot of competition from other beverage companies, both the Cokes and Pepsis of the world, as well as other smaller independent brands like Spindrift, which I know my wife loves.
My wife has that too. Therein lies the problem. There's a lot of competition out there, like you mentioned. Paul LaMonica from Barron's talking about National Beverage. Thanks so much for the time, Paul, and have a great weekend.
Thanks a lot. You too.
Netflix is exploring live TV and bundles as it's struggling to keep viewers hooked. This is a piece here from the Wall Street Journal. They have seen their viewership numbers peak out at 7.8% TV viewership. That was the lowest level since May of 2025, according to Nielsen. So interesting to see this, Mark, from Netflix. They've dived into a couple areas that they were sort of very hesitant to be a part of before, and Reed Hastings, the founder, was almost just against. Ads is one example. They have ad tier pricing now, and now talking about live TV channels that could be coming on the platform really speaks to the amount of competition in this space on the streaming side, as everyone is fighting for eyeballs constantly.
So let's see. Live TV, broadcast TV, advertisements, multiple sources
familiar.
Of content. Yeah, just throw in a box for the top of your TV and a remote control. A bulky remote control. We're back to the 80s, or
yeah, it just feels so reminiscent of this bundling, and it's just a circular web.
It's comical the way they describe it. It's not cable, but it's going to have multiple content sources. We're going to have advertisements and all your favorite local TV networks.
You like sports? We got sports now.
Right. Hey guys.
Oh, so cable.
That's cable.
Time is a flat circle.
They just need to buy, vans and.
It is. It is comical how we've kind of found ourselves back at this point. Particularly, what's mentioned in this piece here is the idea of them acquiring Peacock. There was the long, drawn-out battle for them bidding for Warner Brothers that ultimately went to Paramount. It has just been an arms race in the media space, and some of these ideas that you continue to hear are, like you said, Mark, so reminiscent of the last phenomenon that we had for decades prior of cable television. Taking a look around at markets, the Dow Jones is up about 120 points. The S&P 500 relatively quiet, only up about 10 points heading into the weekend action. We would be closing out for a winning week on the S&P 500 if we were to close out where we are today. So we'll see how the rest of the trading day continues here. I want to wish everyone a fantastic weekend ahead. Enjoy the July summer beautiful weather. We'll be back at it here on Monday at 10 a.m. with much more updates on the market and the economy. Thanks so much for joining us.